Ladies and gentlemen of the crypto space, we're live on a Wednesday, June 12th at 11:32 a.m. I wish my lighting was a little better, but it is what it is. Look at this Bitcoin chart coming in at 69,768. Absolutely remarkable, coming off the heels of a dip to 67,000. We were earlier at 57,000, and we're right back hovering at 70,000. All this anxiety, all this frustration, all of this. I don't know what's going on. What do I do? What do I do? It'll drive you nuts. How can you make decisions? Can't make decisions. You got to stop making decisions. You have to make different decisions because it doesn't work the way the vast majority thinks it works, which is why we tell the story, the alternative story of how that's how I tell the story of how I engage with the market with a different calculation, a different process, something that's actually sustainable. You'll go mad trying to figure out this price action based on CPI reading, CPI month over month, 0%. Oh my God, absolutely insane. The indicators that the general public goes on to that affects their behavior to buy or to sell for what kind of expectation? Imagine you bought at 67,000 and now you're excited at 69,000 with like a 3% gain, 3.64% gain on the day. What kind of returns are that? And that's if you sold and realized those gains. It's not part of an advanced fiduciary methodology. It's the cash. This is the cash. So I guess we could go into what I mentioned yesterday, aside from tapioca. I want to talk about tapioca also, but cash. So cash, we treat it as cash. And I think this post, I'll flip back to that screen that's Ave. This was a good post, and it's a good topic because it's a much more sustainable methodology. Cash flow goes to collateral. So it's a bit of a chicken and the egg. First, you need collateral, but you also need cash flow to generate collateral. So I appreciate that reality, but let's try and tell the story, and then we could contemplate how to which comes first, chicken or the egg. Well, cash flow you put into collateral. You build up collateral, and collateral you could take on debt, and with that debt you could buy more investments. Those investments produce cash flow. You don't have to take on more investments, and it's a fiduciary obligation to only take on investments at an opportune price point, a discounted price point. You either get a good investment or you don't. So you wait for a good one. So if you don't have a good investment, now you have spending capital. You could spend capital, spend less than you make. That's a very traditional type of statement. You make 2 grand a week, spend 1,000, spend less than you make, such that you have a balanced budget. And in this regard, you could always pay off your debt. You use your cash flow to pay off debts. Once debts are paid off, your cash can be used to bolster your collateral. With more collateral, you have more spending power for investments and for purchases. And when an opportunity comes around for an investment, you've bolstered your collateral available. Therefore, you could afford maybe more of an investment. So this plays a factor in your position size calculations and what kind of discount you need, considering the position size you want based on your X, Y, and Z calculation. How much does it cost? How much is it paying? And how likely is it to continue paying? You want to increase your cash flow over time. You want to increase your collateral over time. And as you do both of these things, you'll increase the amount of uh, debt that you can take to finance investment as well as purchases. So I understand as I started, this is certainly a chicken and the egg, and this is an advanced capital management methodology as compared to looking at total net worth or portfolio value, which will drive you nuts, which is why we started the stream. Like, you'll never be able to do that. Most people can't do that. And almost everyone fails at doing that. All that anxiety. So This is a scalable methodology. You could start out small, but this methodology certainly requires reprogramming. If you have $1,000 worth of collateral and you're borrowing, 300, $400 at a clip, um, those are smaller investments, and then the cash flow is going to be relatively small for $400 allocation. So you're not going to have much spending power, but this is how you build a functional uh, portfolio for reinvestment and spending capital. Mike made a good response. Sounds like you want cash flow at all costs, but he followed up. The problem comes when borrowing against your collateral, roll the proceeds into cash flow investments, but the cash flow of the new investment cannot cover your debt costs. Yes, and you blow up. So this is critical that you spend less than you make, which implies also you invest less than you make. So if you're pulling in, $5 grand a week, 20 grand a month, that means, okay, an investment size at 50% of that, $10,000, you're able to pay that off in 2 weeks. Hopefully the $10,000 is producing a couple $1,000s a year, 30, 40, 50%. And if you do that over a course of a couple of years, you're able to accumulate a fair amount of both collateral as well as cash flow productive investments. So he makes good observations, but he correctly states the hard part is one, the time it takes to build collateral and investments, and spending more than you make and owing too much debt, and maybe that debt taking too long to pay off, or maybe the investments not being as productive as you would have hoped, which means you have to be prudent investor methodology, um, due diligence, uh, proper discounts, patience. I mean, seriously, look at Buffett's portfolio of cash. He's not spending that because he can't find anything at the Buffett discount, a distressed asset. And that's why it's so critical to wait and be patient. And it's either a no-brainer of a deal, um, or you have to wait, which is actually interesting because if you're restricted from investing, you have more spending capital. Uh, and that spending capital can be used to bolster your collateral and or spend to live. And this is a cycle that this so it's obviously like a flow in text form, but this is really a cyclical flow. And this is a cyclical flow that means a lot to me at this point. I subscribe to the cyclical flow of capital management, and I think it's a great goal. And I certainly think it's sustainable. And once you start to see an accumulation of collateral and cash flow investments, you're like, oh, that's interesting. And sure, you want more cash flow, but you have to work with the capital that you have. You have to work within your budget. And that is a very important, humbling thing to realize. You have to work with the capital that you have available to you. Gazika, greetings. Good. Crypto Jake, good morning. Tapsy, what's up, y'all? How's it going? I need to adjust to the new room cap. Oh, yeah, we'll be back to the old room. This is a temporary room. Gazika, gonna catch this one later. Quick question. What would be the base size you recommend for both curve and convex so that ETH fees don't eat too much of your gains? So, this entire introduction to the stream is highly relevant. uh, Sizing of position is everything. You have to size relative to the amount of capital that you have available. You can't spend more than you make, um, which is either income source from actual work, trading time for money, and or debt that you could take against your collateral. And you have to respect X, Y, and Z. How much does it cost? How much is it paying? And how likely is it to continue paying into the future? Curves at a nice discount. So all things considered, I said investment season is over, and for the most part, it is the case. A lot of my accumulated capital over the last 2 years has been spent on investments. but there's still the cash flow and there's still this cycle, which implies that once my debts are fully cleared, which are relatively nominal, my debts are on this page. Once these debts are fully cleared, that I have collateral that I could borrow against to add to positions. Uh, my 2 cents for myself personally with regard to curve and convex, I don't have the capital necessarily I would want to add to the positions. I could see adding what, a 10% boost to curve size. Um, and with regard to convex, 10% boost in position size are an interesting threshold. You don't want it to be a negligible boost to position size. You have to do meaningful investments. So if you could bump a position size 10, 15, 20%, that's a 10, 15, 20% increase in cash flow on that particular position. So that's interesting to consider. Um, in that regard, I think we still have it's too it's too high for the price point I would want, like a truly distressed asset, and which is quite maybe greedy to say, looking for an even cheaper price, but relative to the position size I would want, that would be the case. Like I would need like 100,000 clip on curve for a 10% boost, and I'm not maybe 25 cents, but I don't think we're going to get the 25 cents. And it's okay to say no to an investment and not take it. If you cannot get the price you want and you cannot get the size you want, you don't take the investment. So maybe convex, maybe it's not impossible. I do not rush into most investments, and that's certainly where I'm at with regard to the quote unquote cycle, the time of the year, and capital that's available. It's not something that I will entertain right now. So I cannot answer that for you, Gazika. X, Y, and Z it. How much does it cost? How much is it paying? So if you could, if you're, it's a very simple calculation. If you get 20% on the money and you deploy $100,000, you're going to be pulling in $20,000 a year in income. Do you have access to $100,000 in from debt? So if you want like a 4x over collateralized position, you want $400,000 in collateral, you could borrow $100,000, you're pulling in $20,000 a year. Hopefully you have other investments that could pay off the $100,000 in debt, a month or two. Um, Otherwise, I wouldn't take that position. So that it's not an easy calculation. And what you're going to find is you're going to find restrictions all over the place. Damn, I can't do that. Damn, I can't do that. And you have to adjust accordingly. If you are restricted in your capacity to either take on debt or invest, you have to size differently, size positions differently, and make different choices. You have to work within your limits. You have to play the hand that you have. Why investors get into problems is because they're overplaying their hand. And you don't need to do that in the crypto market. You don't need to overplay your hand. When the banana zone comes, everything starts to get weird. And there'll be another banana zone, and there'll be another banana zone. That's why I've talked on streams earlier about a 20-year-old having an 8 and 12-year time horizon. And having these types of time horizons significantly increases your odds of not fucking up, not making a mistake, and not overplaying your hand so you can survive in these markets. DeFi advisors in the house. Good morning. Good morning. My man, I appreciate you. Diego. Hi. DA advisors in the house. Arrows in the house. Good morning. Athletic concept incoming. Subcap. Arrow CVXCRV versus YCRV. What do you think? Well, SDCRV is the peg, and they finance their peg via their monetary policy and their economic system. convex, yearn versus stake now. Um, I think all of them are derivatives. They are quantitatively derivatives. That is the case. I like all of them because they all strengthen the Federation. So that's meaningful. With regard to taking a position, I don't know. In the end, it's impossible to offer meaningful commentary or advice for someone else's decision-making process. Um, I I don't think I'd own any of them because a derivative requires additional consideration. Base layer, it's simple. Asset, cash flow, lock the position, simple. Derivatives, those are liquid, which means at some point anything that can be sold needs to be sold. We're not even at the start of the season, yet alone at the end of the season, to be making such a statement. But at some point, that's the case. If it can be sold, it needs to be sold. And I'm stating it early because at some point, that'll be the topic of the stream. It's not nailed down. You best be selling it. Athletic concept, can you talk about Tapioca and how it will play a role in the crypto space? Well, first off, it's quite early, but they are raising capital left and right. 3.36 mil thus far. I think they're looking for about 8 mil. And I'm very excited to see what happens. Uh, we do not even need to talk about speculation. It's literally launching, it's the Genesis event, and we will know in due course. A period of time will pass, and we'll see how the protocol does. I have a high opinion of everything from the development process to the developers to the team. The amount of due diligence and auditing that was done is quite comforting. This might be the most audited protocol ever, crypto finance protocol. And that's exciting. And from a layer zero perspective, this is a pure financial expression of the capacity of layer zero, a true omni chain stablecoin. It is a stablecoin on all chains of node chain. That's crazy. But it's more than just a stablecoin. This is everything they've talked about for all these years. And we're finally getting to see it go live. It could be a big thing. It could be lackluster because the market is lackluster. Well, when the banana zone comes, everything goes bananas. So that means there's a lot of considerations. Um, what discount and premium, is that a conversation topic? Buck 98. Who am I to assess what a fair market value is? The most important is how much USD zero is taken, created in circulation, being consumed, flowing cross-chain, creating transaction fees, and what kind of APRs are there for base layer blockers? How much cash flow is there? And you could assess from there. If we're run around at 20, 25, 30%, honestly, that's a crazy number in traditional financial terms. It's just important to definitely try and override that gut instinct to expect insane numbers, like crypto space numbers, 1,000% API. It's insane. It gets diluted really quick if it's a quality product. So 20 and 30% is quite reasonable. And actually, it's quite extraordinary. So we don't have those numbers. So anything that we could say at this point is a forward-looking statement, a projection, a speculation. So we can't even make those. It's literally just launching. Hope that helps. Diego, why I take credit with Aave and not with Lamaland? I wanted the fixed rate on the GHO, and I've done Lamaland and I've done CRVUSD, and like the beauty of CRVUSD is the leverage you could take because of the soft liquidation mechanic, and that's frankly the same thing with Lamaland. And I've done that, and I opted for Aave. There Who do you take debt from? Wells Fargo or Chase? Or the 10,000 other private lenders or countless other banks to choose from? These are all products and services, and if you haven't experienced one, why not? Experience it. Last piece of debt I took was for the velodrome position, and that was with CRVUSD. And this particular debt position was for computer equipment, and I opted for AVE, 6.71% health factor, which means I could really sleep at night, meaning this is not getting liquidated, and I'm paying $2 a day, 250 a day for these assets, and they'll be paid off in a relatively short order. Um, what I look forward to probably right about now more so than investments, because I've said and will continue to say investment season's primarily or mostly over, especially for myself. Unless something's screaming an investment, I'm really not going to do it. Uh, Investing should be the most boring exercise of patience. You don't take an investment unless it's a screaming opportunity. So right about now, I'm very much in the part of this cycle where it's debts are paid off, cash flow goes to collateral. That's where I'm at. Small debt, personal purchase, cash flow goes to collateral. That's the part of the cycle that I'm in. So in many regards, this is actually, there'll be a time where it's not collateral because stable coins, albeit you can borrow against stable coins. That's actually going to be interesting how this cycle, we'll adjust this as we talk, as this overall crypto cycle, quote unquote, plays out over the next months and year. Um, but how the collateral component of this adjusts, because the collateral really is the cash part of the portfolio, which we talk about, and that needs to respect FX markets when the dollar starts appreciating, outperforming Bitcoin and other gas tokens. So you guys don't need to remind me about this. I'll probably end up talking about it because this is an important uh, post. The whole point of this stream today is anxiety and discussing all the emotions associated with capital management. And by encapsulating this message in a post, there's no emotion isn't in this post. There's no anxiety in this post. This is a methodology. And this methodology means you need to suppress all the unease that you could have with managing capital, all that emotion, all that frustration, all that fear, uncertainty, and doubt, and just follow the process. And when you follow your rules, your process, you will find your comfort, your clarity, because that's your measure of success. Your measure of success isn't total net worth. Your measure of success is how well you manage your emotions and how well you adhere to your own individual methodology and how well you meet your own expectations. So it is absolutely critical to set reasonable expectations. Hope that helps. Crypto J Cap, what are your thoughts on long term for Curve, Arrow, Velo? I'm concerned there will always be a shinier new DEX that TVL flows to and takes all the fees, making them obsolete in 1 year. Well, position size accordingly. I'm not too fond of the obsolescence thought. I think there's plenty of room in markets for relatively inferior technology. And this is why it is absolutely critical to assess moat and user base. Look, V33 has uh, um, disrupted voter escrow type of tokenomics. It is better in almost all regards, in my opinion, as many other persons have mentioned as well. Uh, but I see Curve as entrenched and its voter escrow implementation as the the only thing that could have built the federation that has emerged. So it is obsolete, but entrenched simultaneously. Uh, it is quite noteworthy that no other voter escrow implementation has been successful, at minimum to the same degree as the Curve Federation. Um, That's a critical observation. Voter escrow really only works because Federation emerged around curve and started consuming excess circulating supply. And that's why we started talking about like the petrodollar system. Um, that's actually probably how we got into very specific talks about macroeconomics. One thing led to another. Don't worry too much about obsolescence and look more so toward user base and transaction fees and volume and consumption. Fintech, these are products and services, and what you want to see is growth. You want to see continued consumption of a business, continued use of their products and services. Shiny new DEX. So DEXs will drive you nuts. DEXs, foreign exchange venues, the trading platform. So trading platforms are race to zero fees, and all you have to do is really look at the volume charts for that. Mainnet still dominated by Uniswap and Curve. I don't think much is going to change on mainnet, but if you look at optimism, huh, would you look at that? Where's DEX volume? Well, oh, here we go. Optimism. Velodrome. What? 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 From a DeFi Llama perspective, the fact that Velodrome has top Uniswap, folks could ping Velodrome team on X. Captain says, "Holy shit, that's crazy." I think this is the first. Like, obviously, they've been talking about it for some time, the Uniswap flippening, but this is maybe the first time I've looked at Dex DeFi Llama and actually seen it just conclusively top it from a DeFi Llama perspective. They've been looking at individual pools. Wow, that's interesting. That's a disruption. Uh, the One of the biggest fears human beings have is when will something be disrupted? So ongoing disruptions are usually not disrupted. That's like who's going to disrupt Uber? Uber's an ongoing disruption of the taxi industry. Uh, so don't fear a disruption of an ongoing disruption. And in this regard, um, it's okay if something comes along that's better. This is an ongoing disruption unto itself. How can we already start speculating what's going to disrupt it? That's not the way systems work. Systems play out until capitulation. That means this has to reach full maturity before something else could come along because right now this is capturing the attention. And it takes a lot to disrupt the status quo. So you make a good point. Let's read it again. Cap, what are your thoughts on the long term of Curve? Arrow, Velo, I'm concerned there will always be a shiny and new DEX that TVL flows to and takes all the fees, making them obsolete. So, obsolescence, disruption. Don't bet on an ongoing disruption being disrupted. That's a statement I'll make. There will always be a shiny and new DEX and vampire attacks, but that is literally what's occurring with what we're looking at in transaction volume data. Velodrome has flipped Uniswap. Uniswap was a disruption. Do you think because Velodrome topped Uniswap on optimism that Uniswap is being obsoleted? Uniswap is a significant business. It's not an investable business, but that's another story. That's crazy. Uh, Phantom, Avalanche, slow, nothing really worthwhile to mention. Arbitrum looks like next up is like a Ramses to top Uniswap on Arbitrum. It took a while for Ramses to top Camelot, but they are pretty consistently above Camelot at this point, and that's a big deal unto itself. Other than Velodrome topping Uniswap on Optimism, we weren't really thinking about Uniswap flippening as being one possible, two, like a target, but that's probably a target at this point. I don't think Velodrome is necessarily going to come to Arbitrum. I think they're wanting to expand to chains, but I think they'll want to play a little bit friendly with the Kingdom team. Uh, Ra is on Fraxtal, but Velodrome is going to Fraxtal. I don't think they're going to do that with every chain. I think they're going to be a little bit collaborative and not necessarily just try and be everywhere. So I still have a high opinion of Ramses. It is not at this price point. This has been a topic in our Discord. At this price point, it is not too productive relative to my basis. It's quite productive. Um, for instance, this is quite an extraordinary week of productivity. Let's go to the chart at 4.7 cents. I'm still quite satisfied. At 1.8 cents, which was my entry, I watched a 20 chip turn into a 200 chip and now back to like a 60, 70 chip. And for me, the way I manage capital, that's perfectly acceptable. We are still multiples, 2.5x from entry, and I can't capitalize anyway because that's the beauty, as I would argue, of a locked position. But this locked position produces that revenue relative to my basis. That kind of revenue is quite extraordinary. It is not at a discount. A discount implies probably this green box. It's close. I highlight the sexy zone as well for Nile. Sexy zone is down here. Distressed asset. These are assets are not in distressed territory. And it's not for me really to speak too much about when is a good time to invest. That's everyone's individual uh, uh, responsibility to make a decision on. But this is my perspective on how I would think about price zones, targets, so on and so forth. Um, Linnea is kind of off the radar, and Mantle is kind of evaporating. Um, but generally, with regard to L2s, Arbitrum heading into the meat of this cycle, I'm most excited about. Optimism is probably on par with my sentiment uh, between Optimism Superchain narrative and Arbitrum orbits. Uh, they were the first roll-ups for Ethereum mainnet, and I think they're quite entrenched and each significant respectively. I look forward to what comes of their roll-up tech, especially as they become more decentralized, which is what Optimism just announced, and Arbitrum said they're doing or going to achieve in short order as well. Hope that helps, Crypto Jake. I'm locked for each of these forever, but it's just concerning you now. So that's the entire responsibility is to alleviate concern. Uh, my I don't even have the chart up anymore for Clio. Unfortunately, it is between Mantle and Clio's, you know, performance and volume is quite a disappointing allocation. I don't have a capacity to liquidate even the NFT. It's part of my business rules that once I acquire a position, I'm unable, especially a lock position, I'm unable to liquidate it. So if I deployed 25K on Clio, I knew what I was getting into. I knew the size that I was buying. I calculated the X, Y, and Z. And unfortunately, the Z did not play out. So I write it off. But it is important to clarify that these lock positions, I write off immediately. I talked before that I define them as purchases, not positions. So if you purchase something, you're not thinking about selling it. And that is the sentiment that I bring into these types of purchases. So if I'm purchasing something with no intention to ever sell it, I'm pretty sure that should tell you there's a certain decision-making process going on in my mind with regard to due diligence and um, my expectations, and I will experience those expectations for Cleo. I hoped it to do well. It did not. Hopefully, it does better in the future. And as of right now, it is significantly underperforming according to my expectations. So, sure, that's disappointing. But uh, I'm grateful that I was able to buy many investments over the last years, and I don't need all investments to succeed. Frankly, in crypto terms, the vast majority of my investment choices have been good, have played out well, have overwhelmingly met my expectations. And this is something, in my experience, I could not achieve in equity markets. I couldn't meet my expectations in equity markets, but in this crypto space, I have significantly done much better with regard to meeting my expectations and making good investment choices. Hope that helps. Craig's in the house. What up? What up? How are you? It's been a bit. Hope all is well. Connect the dots. Good morning. And furthermore, hello. Arrow, my hesitation with SD curve is having to lock up SD coins to get max boost. Hence why I only mentioned CVXCRV and YCRV. Now, bear in mind the reason why SDCRV is strong in the peg is because it's a financed peg. And that's an interesting thing. Because of their own economics staked out, uh, they have an ecosystem unto themselves. So when getting involved in an ecosystem, that's an investment, which requires clearly ancillary investments, not just the SDCRV, but also SDT to optimize the interaction with that ecosystem. That's a massive consideration compared to just a derivative CVXCRV and YCRV. It's not investing in those respective ecosystems, be it convex or urine. You just have this liquid asset that has properties. So staked out requires management and additional consideration, which increases the complexity of potential allocations, owning those types of positions, comparatively speaking, to the products offered by convex and urine. Urine's product hasn't had the best success with regard to soft peg, convex as well at times. And those are considerations. And bear in mind, this is exactly why I always tell you guys in private Discord that I can't deal with any of that shit. I got enough complexity to deal with the way I manage capital, especially with the business, to take on this additional responsibility of an entire staked out ecosystem or pegs, soft pegs for convex and Yearns products. I don't want to take it on. And from a collateral perspective, or is that's a consideration? I guess you could use some of these as collateral on some platform or another. I would prefer the relative stability of a Bitcoin and Ethereum from a collateral perspective. So from a cash flow perspective, what are you getting on CVX, CRV, and Y curve? 20, 30, 40%. You get that with lock positions. And part of my business rules allows me to have a much less complexity to think about with lock positions. I've said that for a long time. I think locks are one of the best inventions of these markets. And the one, they've allowed my business rules to be created. And two, they explicitly simplify the crap out of capital management because it's not a position, it's a purchase. And that might be difficult from one perspective because um, you can't sell it, so there goes the equity, so to speak, or you can never reclaim that invested capital. But two, that also simplifies it. It's akin to walking into a retail store and buying an item, except this item actually pays you. So makes it complicated, but it also makes it simpler depending on how open people are to reprogramming themselves into how they think about capital management. Crypto Jake, should we buy? The very general statement, dude. Should we buy what? Why? When? For what purpose? What is what does buying serve? Do you want to buy to sell later, or do you want to buy investments in some sort of sustainable fashion? And I really like that wrote this post. This post is very much a result of many years of mental reprogramming. There is no emotion when I say this post. This post brings me great comfort because this is an equation. Under these conditions, I do this. At the end of the week, I do this. I repay this, and I have this is the amount of capital that I have available from a debt perspective. Is I have X amount of cash flow to service that debt. I pay off that debt. Once I pay off that debt, I accumulate collateral, and that collateral gives me investment capital. The hardest reality about this post is chicken and the egg, because clearly I have the investments and I have the collateral. How do you get, which one do you get first? You get the investment first or the collateral? And there is no answer to that. There's no answer to that. It's what you need both. So how that maybe the best statement there is like what Charlie Munger used to say. Your first $100,000 is the hardest thing in the world, and probably nowadays, with the increase in currency supply globally, it's not your first hundred; it's your first quarter mil, because then you have optionality. Obviously, the more capital you have, the more optionality you have, and clearly, the more collateral you have and associated income producing investments, yeah, the more optionality you have. What is it? They call it not cash flow, uh, sources of income. What is general public revenue streams of income? I do blog posts and I spell check and Fiverr and listen. That's the general public. If you go on like a TikTok or a YouTube and you find search for revenue streams or alternative sources of income, however you need to get to X amount of collateral and X amount of investments that are cash flow positive, it's worth it. Hustle. Do whatever you have to do. I believe that's what Charlie Munger also said. You do whatever you have to do to get that first 100K. He said that a long time ago. So I would say, in very Charlie Munger-esque fashion, do whatever you need to do to get that first chunk of collateral and those first income producing investments, because those are the critical pieces to this equation that I have on the screen here. You need collateral and you need cash flow investments. And then you have your limitations. You work within your limitations, which allow, and this equation, you're able to get more collateral and more investments over time. And this is a self-sustaining feedback loop that grows into your future. The earlier you're able to execute this type of equation, the more time you have. If you're 20, in 12 years' time, you're 32. If you're 40, in 12 years' time, you're 52. A big difference there. And time is so on your side when you're a kid, and it's not on your side when you're an adult. So, connect the dots. Let's keep it going. If you're on X or on YouTube, throw some questions. More than happy to answer anything on your minds. Otherwise, we'll finish up these questions and we'll wrap it up for the day. I've been bad with most TGEs. Is there any reason Tapioca might be different? The way TGEs or LBPs work is over time the price goes down, and that is actually just everything they did is quite extraordinary. If you go over here to the chart, if there's no, oh, they disabled it. You were able to, so they fixed it. So if there's no interaction with the price, the pink line is followed. If people are buying and affecting the price, you're on the blue trajectory. So if nobody buys between now and the end of the auction, we'll be at 25 cents, which is actually pretty interesting because one, people are certainly going to buy between now and the end of auction. And two, 24 cents by the end of auction is pretty interesting. And the fact that we won't be there. Um, at the end of auction, if we're at $2 or greater, that'd be pretty damn interesting. I have no capacity to tell anyone should we buy, and as Crypto Jake would love to know, and so many people would love to know. Um, and TGEs and LBPs are a pain in the neck. The investment process is a pain in the neck, especially when you have no price point and no sexy zones to go on. So there is none of that information, that contextual information to help you in that decision making process. You're in the max risk, max reward uh, part of the investment process with these types of allocations. And that is, there's no other way to say it, max risk, max reward. Max risk implies also potential for maximum loss. And then you could talk about all the tech and how extraordinary the tech is. Great. In the end, the price point speaks for itself. The market defines the price based on how much consumption of the products and services occurs. And you will only know that after it begins being used. So we don't know that now, and we won't know that for some time. I look forward to seeing it, though. Hope that helps. Raul's in the house. Crypto Jake, you're very welcome, as always. Sir Joe Present, Crypto Tube. Good morning, Cap. Tapioca market cap on LBP is 15 mil right now. Smells like a discount. Uh, I like the sentiment. I uh, I don't I don't have a capacity to express opinion on whether it's a discount or not. We don't have that contextual information, as I just mentioned. For transparency purposes, I was a seed investor in their first round when they literally just started thinking about what the hell Tapioca was going to be. So I have exposure to it at a discounted price relative to its current price. And I have no idea what it's going to do from an investment standpoint, what kind of revenue it's going to generate. But everyone sure as hell knows my methodology. It was a purchase, and I have zero capacity to liquidate under any circumstance. And that's just not a technological consideration. My business rules require that I have no capacity to sell basically anything I purchase, especially if there's a locking component. Collateral and cash, as I define the cash position, uh, I do. I have a capacity to manage the composition of cash, especially with regard to debt and reinvestment considerations. Uh, Hale DNX, I don't know what it is, never heard of it, but I will entertain that question. Let's do it. We don't talk often about random tickers that folks mention. I think this would be a rabbit hole, as all crypto businesses are. Healthy market cap, 80 mil. That is not a micro cap in crypto terms. A couple mil market cap getting off the ground, two, three, four, five, less than 10 mil. This is not a mid cap, two, three, four, 500 mil. This is a well capitalized crypto business from a market cap standpoint. Fully diluted, whether they have emissions, it looks like they do have emissions up to max supply. Uh, that's generally what I could take out of CoinGecko. Trading volume, trading less 8% on a daily basis. Interesting. I don't know what it is. Okay, there you go. I I'm not interested in the AI and DeepIn investments from a crypto space perspective. That was very hot, and there was a lot of hype associated with it. and I don't really care about hype at all. All I care about is 20, 40, 60, 80% APR, X, Y, and Z, and that's my calculation. So it could produce an APR, I'm sure, depending on what kind of products and services they offer. Um, okay, it looks like decentralized compute, quantum computing. I don't know about that statement, but decentralized compute. Okay, there you go, DeepIn. All right, there's going to be a lot of this tech, and I have absolutely no capacity to speak negatively about this, nor validate the business contributors. This could all be quite reasonable. I do not know of any of them. The but is that Sam Altman? No, thought I saw him. Anywho, I don't have an opinion. The last reason I would invest in, I am much more interested in a non-commercial entity in crypto market terms. No, not that. Not that. That's work. I am much more interested in something like a Tapioca, or something that is just grassroots, homegrown, crypto native. Um, I prefer credit and foreign exchange products and services. As big as AI of a narrative, or decentralized compute, DeepIn type stuff, I'm I know quantitatively that credit and foreign exchange is bigger. So credit, and that's quite a a statement to make, because stuff like Uniswap and Curve and exchanges seem boring AF, uh, but folks still don't realize they're banks, because that's what banks do. If they're providing a banking service, if they walk and talk like a bank, even if they're not called a bank, they are a bank. These are banking service providers. That's what credit is. That's what an exchange is, foreign exchange. And it's kind of taken for granted since Uniswap came online in late 2019. The capacity to provide liquidity. Oh my God. So that's not normal in traditional finance, but we have access to these systems in crypto to the point where it's literally like overlooked, to the point where you make a great observation. This DNX, AI, and deepen and compute is exciting. But what about credit and foreign exchange? Much bigger, much bigger than Nvidia, much bigger than all of it. It's everything. So I maybe that's my way of peering through the bullshit, or the way the majority inspect opportunity. They see what's exciting and they look to their peers, and I don't need my peers to tell me these opinions that I offer. Uh, Credit and foreign exchange are the biggest business on the entire planet. That's not really debatable in almost all regards. Hope that helps. Crypto Jake, my man. What I mean is, I've almost always seen an opportunity to buy cheaper on market after TGE. Yes. In the end, we're about to see what plays out. There's one more day left, and then we go through a couple of these processes. And what was it, June 16th or something? A couple of days, and we'll know sooner or later how well the it does. Buck 96 back up to two. Is it at about two? It's about two. All right. $2 launch would be quite interesting, which is a 74 mil fair market, fully diluted value after 1 year. So it's a 15 mil market cap. That's a palatable launch market cap. A little bit lower than certain seed rounds. I think certain seed rounds were at 24 mil valuation. So this, if anything, the fact that it is a deterministic and immutable protocol. I very much look forward to seeing what plays out. Hope that helps. Diego, which was your biggest risk in finance? So I don't consider crypto a risk. I consider crypto as alleviating my risk. So I had a nice podcast slash interview yesterday from the Defiant. That'll be out, I think, early next week. And that was a great question. What makes me defiant? Why am I a deviant? So I see crypto as alleviating risk. And then obviously the general public sees it as taking on risk, or maybe even more risk than equities. It's more volatile. But everything I've told you guys over the years is me alleviating risk. And to top it all off, my business rules that further alleviate risk and simplify my capital management considerations. My equation. My equation is simple. And that's what brings me my comfort, alleviates my anxiety, and also significantly reduces my risk, my rigorous methodology. So my biggest risk, I would say, is back in 16 and 17 when I was mostly allocated to equities. Um, it's the businesses, it's the corporations that raise capital and have debt. And I had a big exposure to a company that was the right choice. It was the right company. It is the next big thing, quote unquote. But their debt load made them vulnerable to a hostile takeover and changing market conditions for labor costs. And ultimately, they went through bankruptcy, and the shareholders were liquidated. Hi, that was me. I was a shareholder, and I was discharged. Mother Namaska Lithium. All you have to do is maybe Google their history. It is one of the most critical operations in the Western Hemisphere for lithium hydroxide refining, and it's been a disaster. And it is the most one of the most critical refining operations in the Western Hemisphere. Period. So the rationale was there, and this plays into maybe what that Hale Crypto was talking about. The rationale was there. It was a great investment, but I didn't see the risks. I didn't see the full picture, and I certainly didn't see what I do now. I took a big risk, and then I wanted exposure to the best refining operation in the Western Hemisphere, and it didn't work out as I would have hoped. My expectations were not met. I was disappointed. So that's why nowadays my expectations are very reasonable. That's why I hammer X, Y, Z. How much does it cost? How much is it paying? And how likely is it to continue paying me into the future? Now, today. And if it's something that's not paying today, and I hope it pays into the future, there's your risk. That's risk. If I can invest in something on Monday and get paid on Wednesday, I have alleviated risk. So that's what makes me defiant. Crypto has alleviated so much risk. It's, the general public won't see it, they don't see it, but the captain sees it. Hope that helps. No horns, no tail. If something can be sold, it will be sold at some point. That'll be a title of the stream. Arcane Strand, any thoughts on Ton blockchain from an investment side? No, zero. Telegram, cool. What's it going to do? The same exact thing that every other chain does. And in that regard, follow the liquidity. And the liquidity says, the liquidity says, check back on mainnet. There, mainnet has the dollars. In the end, a market is, if it ever loads, is only as strong as its dollar supply, because this game is scored in dollars. Why is it so slow? Hey, look at that. Look at that little uptick in dollars. That's a little vertical uptick. 160. Ethereum mainnet has $79 billion. That's a lot of dollars. So great, ton blockchain. How many dollars are on the chain? Stablecoins, dollar liabilities. You don't need to digress too much into the fact that a stablecoin is pretty much a bank deposit. It's basically a dollar liability. Not much to differentiate it and the dollars that most of us use on a daily basis. Um, Zeno 39, seed was 22, 22, 44, and I think they did some that higher, maybe. I don't know. Hope that helps. Fogley, what opinions do you think are worth the risk reward to put BTC ETH capital to work in order to generate income versus just holding in a hardware wallet? Okay, so Bitcoin and Ethereum in a hardware wallet is not an investment. I mean, even Bitcoin maximalists talk about it very well. That's saving. That's a savings account, and savings grows over time, and I think that that is a decent part of their narrative. Put to work, as in hypothecating and re-hypothecating. I don't know. I'm not a liquidity provider. I don't know, but I am fond of this methodology, and it's exactly what I do, and I will continue to perform this highlighted post. And this is the most recent example of where I'm at. Prior to this, it was a velodrome position. Debt was paid. This was computer equipment, so I could talk to you guys. That will be paid in short order. I will show you this in a week or two, and I'll pay it off. And then I'll accumulate more collateral. If there's an investment that's opportunistic, I will take an investment. If there's no investments, I'm required, if there's no reasonable investments, I am required to not invest per business rules. I am required to accumulate additional collateral, uh, be it in whatever cash part of the portfolio form I choose as most appropriate. And right about now, where we are in the market, that denomination is clearly a Bitcoin or Ethereum. Hope that helps. Oh, Gaffer, last question, and we'll wrap it up for today. Thoughts on solidly at this price point? I was thinking of adding to my position, but recent voting rewards have been abysmal. Well, XYZ. How much does it cost? How much is it paying? And how likely is it to continue to pay? So, unfortunately, it doesn't really pay. So, that is a speculative allocation that it will pay in the future. So, you have just highlighted your risk. If you buy it on a Monday and it's not paying you on a Wednesday, you're taking on a risk consideration. Risk that your expectations will not be met. Your investment, the purchase of something, has to have an expectation. Otherwise, you're not. And you need to define it. What is your expectation? And hopefully, it's a reasonable expectation. But if that expectation is cash flow, when? How much? Clearly, it's a solidly position you're talking about. Therefore, it's probably going to be a lock position. Tends to be a permanent lock. So it's a purchase, not a position. Fair amount of risk. It doesn't pay Wednesday. Um, Food for thought. I hope that helps. All right, it's a Wednesday. You know what that means, ladies and gentlemen. We're gonna have another one on Friday. I appreciate each and every one of you joining me till the end of the stream. 397 people made it. All of you guys and gals are so awesome. You know the deal. We have our great private Discord where this conversation continues 24 hours a day, 7 days a week. And I mean, nowadays, the folks in there have so much experience having survived the most difficult parts of the market. I will see you guys again on a Friday. I wish you all a good day. Peace.